Good morning, YouTube. My name is Joel from the Crypto Byte team, and I'm here to talk to you guys today about the cryptocurrency market crash. Now, should you be worried? In my opinion, you shouldn't, because blockchain technology is here to stay, and it's very revolutionary in terms of the fact that you can decentralize large corporations and give power back to the people. And I will go on about this in another video, so definitely keep your eye out for the futures of Bitcoin and what it means for your average person and businesses. I'll probably have a different title, but keep your eye out for it. And pretty much we want to figure out what's happened with the cryptocurrency market and why did it crash. And even though it did crash, it did return back to normal. So it wasn't the end of cryptocurrency because blockchain is just too damn good. And so looking at Bitcoin, because Bitcoin is the herald for all alternate coins, when Bitcoin goes up, alternate coins go up. When Bitcoin goes down, alternate coins will go down. Well, most would. And there was a massive, this is right here was the December pump where it went all the way up to around 20,000, I believe, or 19,000. And it dipped right down and had a little bit of resistance. So it was a bit of a correction, around $13,000 and $15,000, and then it reached an all-time high, which was around 17,000, and then there was just a bearish market trend all the way down to 6,000. Now, if you bought at 6 grand, congratulations, you bought at the all-time low, and you're quite smart because that was definitely the best time to buy because you've already made value considering Bitcoin is already at 10 grand. And with the current upward trend, things are looking quite positive for you, and I doubt it'll dip back down past 6 or even 8 grand. But it is quite possible for it to actually dip back to 8 grand because you know how fluctuations work. But 6 grand, I doubt it will reach that. So let's go look at the reasons for the January dip, and just take any advice that I say. These are my opinions. Don't use them as proper financial advice because I'm not a real financial advisor. I really like blockchain technology, and I have opinions about what the price will do in time. So let's talk about the coin market crash from this article from Jez Smith, and he talks about how the Lunar New Year, rumors of government regulation on South Korea, China, and Russia, I believe. That was what was happening. He believes that the Lunar New Year and government regulations, along with FUD, are the reasons why that there's always a January dip. And I personally agree with him because with Lunar New Year, and by the way, Lunar New Year is on the 16th of February, which is today. So happy Lunar New Year! All those who get red pockets, please invest it back into cryptocurrency so we can get that the coins pumping again. But anyway, Lunar New Year, basically people are preparing for this day, and they might have bought plane tickets, train tickets, any sort of transportation, maybe presents, just anything to do with the Lunar New Year time, just preparation for it. And they definitely would have taken out all their cryptocurrency and most likely exchanged it for fiat cash so they can pay for these things. And there's also rumors of the government regulations, so from South Korea and China and Russia also, I believe. He hasn't included it, but I did read up about it somewhere. And these countries, they tried to ban or regulate Bitcoin, and I do believe that is quite hard because these applications are decentralized. They exist on your computer or device, whatever you're running it on, and they can't really regulate it without taking away or managing your technology, which even invading your own computer, I believe, is just a personal breach of human rights. And also with regulations, it also could refer to internet neutrality. So basically, they control the amount of internet you can view, and you'd actually have to pay to view specific sites. So that in itself, again, is a breach of human rights because well, personally, is what I believe, because the internet is a place where you can browse and learn anything you want, uh, with a price or without. So let's go look at the December 2014 and January 2015 January dip. So this is just the trend here, and as you can see at the all-time low, there is a nice dip which goes all the way down to $167, and that's a pretty solid dip, and it has happened in the past. And so Bitcoin was very cheap back then as well. So this is the December 2015 and the January 2016 dip, and it as you can see in the middle, that's the dip there. So it went from around 430 to 350, and that again is a pretty solid dip as well. So we can already see there's already a two out of, well, I should say three trend. Here's the third one here. So December 2016 to January 2017, there's another dip, and so we already know that the all three, and including the fourth here, which is December 2017 and January 2018, there's a dip again. So we already know that there's always going to be a dip in January, and so that kind of prepares you for the future January. If you're ever gonna invest, make sure that you pull out during the all-time highs in December. Take your best bet when it's a real nice price, and then just pull out for the January dip, because the January dip is it's something that's reoccurring, and it'll most likely happen in 2019 January. So, uh, later this year in 2018, make sure you try and transfer your cash back to fiat. If you can't, just hold on for dear life, because, oh my lord, those coins will most likely dip. Now let's go look at another post over here. So this is an article by the Business Insider, and this kind of just explains like everything about the crypto crash. So I'll go through it nice and quick, because it's pretty much the same as the post I was looking at previously. So the cryptocurrency market has lost 340 billion, and from what I remember, the coin market cap, which is up here, which is the total market cap of all the cryptocurrencies, it it was at 900 million, I believe, back at the all-time high around December. So when Bitcoin was around like 20,000 to 19,000, I believe the market cap was at 900 million, and that is crazy big. And then after the huge crash, which around like maybe I think it was like early or mid Jan, I can't remember, when the market hit like an all-time low, and it was around like the market cap was at 200 million, and that's a crazy huge dip. And so a lot of people just pulled all their money out of cryptocurrency and crashed like a lot of the market. So everyone who sold at low prices and made a loss, just remember that you actually haven't made a loss until you sell your coin. So even if you're holding and the coin's worth jack shit, I mean, it might grow and be worth something in future. So you have to remember that these coins can grow, and you haven't made a loss until you've sold your coin. So that's just a little disclaimer there. And so the analysts, back to the crash reason, sorry, the analysts are variously blaming concerns about regulation, light trading volumes in Asia, and Bitcoin futures. So I'm just going to talk about, this is the regulatory crackdown again. So we're just talking about the countries that were planning on regulating Bitcoin and other cryptocurrency, which created FUD, and a lot of people wanted to but so Russia was also signaling that it was going to crack down on cryptocurrencies. Here it is, and there was potential for that. And if people read that, FUD hits, and they want to sell out. So, and it is fair. And so with the Asian volumes tailing off, it was pretty much just like people making large scale exits, which created an imbalance in the market. So there's more sellers than buyers, and obviously that creates a very imbalanced market, as stated just a moment ago. And so here's the Bitcoin futures theory, and just to sum it up nice and quick for you guys, it basically refers to the big boys, so the whales with a lot of money, not in cryptocurrency but in fiat cash, and pretty much what these guys are doing, or maybe a bit of both actually. And so what they're doing is they basically short Bitcoin, and then they make sure the Bitcoin price drops. So they could be telling people who are whales with a lot of Bitcoin to sell off all their currency, or anything like that, and then the Bitcoin dips down, and then all of a sudden they make a lot of money. And there was a lot of reasons why it could have happened. These are just speculation theories. There's no actual proof, and it is quite unfortunate if that would be the case. I really hope it isn't. And so Paul Kowalski, I hope I pronounced that right. He's the CEO of CoinFirm. He basically said a correction was something that was a long time coming, and I personally believe that as well. I think the coin Bitcoin itself is a heavily hyped up coin, and it shouldn't actually live up to its price, because the coin itself is actually quite garbage in my opinion. It's quite slow, and there's high fees, and it really needs the Lightning Network to really like make the coin good in terms of its competition. Anyway, so that was just a little bit of me bagging on Bitcoin, and yeah, so he says to expect more volatility, and the coin market is quite volatile regardless. So either way, the whole point is there was 3 points on why my personal opinions is why the coin market crashed. One, there was the Lunar New Year, there was the huge FUD that connected all things together, and there was the government regulation. So all of those all work together to help bring the market to around 6 grand. Um, I'm not too sure that that brought it all the way to 6 grand, but it definitely did give a massive impact on why the coin had a massive correction around early January. Although it is February now, the coin is correcting, so all you holders of Bitcoin, the coin most likely will come up and go over what you've bought it at. So good luck to all you traders out there. This is the end of the video. If you have any questions or you would like to comment on the video, feel free to leave it below. And yeah, cheers.